Hey, this is Annie Dickerson with Goodegg Investments. Ready to talk real estate? Let's get cracking. As I'm recording this, it's Friday, March 13th, 2020. Yesterday, on March 12th, the stock market fell almost 10% in a single day, which was the biggest single day drop since 1987's Black Monday, when stocks fell 22.6% in a single day. How will this market chaos impact your multifamily real estate investments? Well, that's exactly what we'll dive into in this video. We'll share with you how coronavirus is impacting the stock market, whether this pandemic will negatively impact your multifamily real estate investments, and what you can do about it. Now, first, let's go back to that Black Monday of 1987, where the stock market saw a whopping 22.6% drop in a single day. A single day. Can you imagine? That's like saying if you had $100,000 on a Monday morning, by the end of the day on Monday, even though you didn't do anything differently on that day than what you did on Friday or a Saturday or a Sunday, you've suddenly lost $22,600, just disappeared into thin air. Now, I don't know about you, but I don't have the stomach for that huge amount of risk. That is a massive loss. For many people, that $22,600 could be an entire year's salary gone in a single day. After that massive hit, it took the market 2 years to recover lost ground. Now, currently, there's still a lot of turbulence in the market right now, and no one quite knows how this coronavirus pandemic will play out. Factory shutdowns and travel restrictions are affecting global supply chains and stoking public fears worldwide, which means that this spring, fewer people will be hitting the mall, traveling, going to concerts, attending conferences, and doing all those other things that you tend to do in springtime, which could potentially have a huge impact on the global economy. Now, while it's too early to say whether we've hit the bottom or whether there will still be more ups and downs, what we do know is that there's a lot of panic and uncertainty out there. And when that's the case, people tend to make pretty irrational and unpredictable decisions. Now, some people might invest more in the stock market, figuring that this dip means that stocks are essentially on sale and that this downturn will eventually correct itself. And then there are others who may have experienced steady growth over the bull run of the last few years, and they might be getting pretty nervous as they see this downward spike. And they might be frantically pulling out their money to protect any profits that they still have. So, I don't know about you, but when it comes to my money, I do not want to put my life savings at the whim of other people's irrational and unpredictable decisions. It's just basic common sense, right? So, while people are over here panicking about the state of the stock market, let's switch gears and talk instead about real estate. How has the coronavirus pandemic impacted real estate investments, and specifically multifamily real estate investments? Well, let's just say that multifamily investments tend to be pretty stable, steady, and quite frankly, kind of boring. Real estate is a long-term investment offering significantly less volatility than most other investment options. When you do your due diligence up front and invest in the right markets and the right types of assets, your multifamily real estate investments will weather any type of storm, pandemic or otherwise. Now, across the dozens of multifamily properties in our portfolio, we haven't seen any major swings in either direction. And frankly, we don't anticipate any, because Here's the thing. Whereas people are panicking about the stock market, at the end of the day, guess what? They still go home to their apartment or to their house. Housing demand doesn't go down just because there's an outbreak. As it turns out, whether the stock market is doing well or not, people still like to live indoors. At the end of 2019, multifamily vacancy rates nationwide were at just 4.2%. That means that given a 100-unit apartment building, 96 of those units would have been filled. That means there's a ton of demand for apartments across the country, and especially for B and C class workforce housing that's more affordable than the luxury A class apartments. And the thing is, that demand for B and C class housing is only going to heat up because new construction will all be A class apartments. They're just not making any new B and C class apartment complexes. Now, in addition to investing in B class apartments, we also make sure to underwrite all our deals conservatively and make sure we have ample reserves built up for unexpected situations just like this coronavirus pandemic. And lastly, as you're considering your current and future multifamily real estate investments, be sure to invest in markets with not just strong job growth, but also strong job diversity. What does that mean? Well, let's take coronavirus as an example. What industries do you think are going to be hit the hardest by this pandemic? Probably airlines, hotels, and airports. And if a given market is heavily reliant on the tourism industry in this case, then that market might get hit pretty hard as the layoffs start to happen. That's why it's important to invest in markets with strong job diversity. So if one sector goes down, you still have multiple other industries to support the local economy. So if you're like me and you like stable, steady, boring investments that give you a moderate amount of passive income each month and grow your wealth over the long term, then keep investing in multifamily real estate. Whether there's a global pandemic or not, there will continue to be strong demand for affordable housing. So your multifamily real estate investments will continue to do well. So, are you currently investing in multifamily? If so, we'd love to hear about it. Comment below and tell us how your multifamily investments are doing. And if you're looking for a way to create passive income, but you don't want to deal with the hassles of being a landlord, you might just want to consider investing passively in something called real estate syndications, which are essentially group investments. As a passive investor in a real estate syndication, you get all the benefits of investing in real estate, including monthly cash flow distributions, equity, and great tax advantages, all without having to fix a single toilet or talk to a single tenant. To learn more, grab your hardcover copy of our book, Investing for Good, the surprising strategy for building wealth while also making an impact. A $24.95 value, yours free when you pay shipping and handling. You can find the link down below in the description. And finally, if you liked this video, hit the like button below, share it with your friends, and be sure to subscribe. I'm Annie Dickerson with Goodegg Investments. Thank you so much for watching, and I hope you have a sunny side up day.